Hey everybody, Tom Gentile. Welcome to Tom's Trading Essentials webinar series. This is in conjunction with Optionetics. Glad to have you guys here again for week number 3. I hope that all of you are picking up and learning and getting some of the knowledge that we've been discussing over the last few weeks. Tonight, I want to take it one step further. We're going to do a review. We're obviously going to do a review. I want to review what's happening here in the last last couple weeks. I've got the case studies from week 1 and week 2. We're going to take a look at Coca-Cola, and we're going to take a look at FedEx, and we'll discuss those as well. And we'll talk about how to trade like a professional. That's going to be my topic for tonight. And I want to mention one more thing, that we only do this. We only did this one other time this year, so I've got something very special for those of you that have been browsing our tools and looking at what our tools have to offer. I've got something to offer some of you, all right? Actually, very few, but we do have some spots open for our professional trader program, and I'll discuss what that is at the end of the program tonight. So a lot of stuff to cover. We do these sessions live, as you know. We also take questions. You're welcome to ask any questions tonight. I can promise you I'm not going to get to them all. I apologize for that. When we do these open sessions for our Optionetics students, we get thousands of people that register for these classes and come into these classes. So there's a lot of folks that are coming in here that some of you I haven't seen or heard from in quite some time, and it's great to have you back. But ask questions. We'll answer as many as we can. Obviously, the most popular ones we're going to get to, and of course, the session's being recorded, so I'll get you the recording soon after the live event is over. Finally, the disclaimer you see on the screen. We put this on every webinar that we do here at Tom's Trading Room and Optionetics. You can read it from cover to cover. All you have to do is just hit pause on the recording I'm going to send you. But a couple of points I want to make before we go forward. First, stock and options trading has large potential rewards, but also large potential risk. All right. I'm sure if you trade options, you know that. The other thing I want to mention is that myself and anyone associated with Optionetics or Tom's Trading Room, we are here as educators, all right, to show you how it is we trade the markets. All right. We're not specific investment advisors. We're not brokers. We don't give specific trading advice. You need a broker to trade with. You must meet certain requirements, and everything I'm going to talk about tonight is in US dollars unless noted otherwise. So, for those of you that are joining me for the first time in our 3-week session, you know me. I've been in this business for quite a while. I've dabbled in a little bit of everything and a lot of some other things in this market, in the business of trading. I co-founded Optionetics. I've appeared on CNBC, Bloomberg, Reuters, Fox Business, and more. I've done a lot of publishing and a consultant. I provide content and research to companies worldwide. And you probably know me as an Optionetics student, as the founder and editor of TomGentile.com. I put a good bit of free material up there at TomGentile.com, Tom'sTradingRoom.com, and Tom'sOptionTools.com, which is where we're going to be spending a good bit of our day today. It is Tom'sOptionTools.com. So, review of weeks 1 and 2. We'll talk about more money patterns and then how to trade like a professional. All right. So this question I got this question. It was about the middle of the year, and then I got it again by a couple of folks here in the last week, and that is, why did you buy back Optionetics? And there was really a mutual feeling between me and the company that held Optionetics that I could do a better job for the students with my smaller, more nichier company. All right. And, we're much smaller than Schwab. Tom's Trading Room, Optionetics, much smaller than Schwab. But we offer Trading Essentials webinars with the team. And my team, as you know, I've brought a lot of the Optionetics group back. Devin Pearsall is with me. Christina Nugent is with me. Joe Contes is with me. Jeff Beamer, Mike Wade. We've brought I like to think I brought the cream of the crop along with me to continue to teach in a webinar type format, so I can get to everybody around the world without having to travel, without having to be at hotels, without having to tie up a couple of days of your time, because you can come on board and look at these live, or you can get these real-time seminars soon after in recording. Now, what do we also offer? We do offer advanced seminars throughout the year. We also offer premium software, like I did in the past with Optionetics, and that was we used to offer something called Platinum. I have something that is a major upgrade from Platinum. It's like going from the iPhone 1 to the iPhone 10 XS, as I like to call it. And you'll see as we get into it, I'm going to try to jump around into the software a little bit toward the end of the program. But advanced seminars, I don't have any more advanced seminars going on this year. This is it. But I do have something for those of you that have wanted to come into our premium software and come into it in a big way. I got something really cool at the end of tonight's program for you. So call and put review, calls and puts, I think, are the first things that option traders learn about. I think where a lot of option traders go wrong is that they stop at they get to the point where they know calls and puts are cheaper than stocks, but they trade like stocks. And if you end your education there, you're doing yourself a very bad disservice. And the reason why is because your account will end soon after. With calls and puts, there is price. The price of the stock determines the movement of a call and put. But, you got to look at time to expiration. You got to look at implied volatility. You have to look at volatility as you go forward. And so that's important as well. Okay. I pulled this. If you see this picture here, I actually yanked this off of week 1 so I could show you something that we discussed. This was we were spotting an opportunity in Coca-Cola. We were looking at something called channel collision, and we were looking at what was called our darknet trading strategy. And you can see here, this is a classic example of darknet where we have short, intermediate, and long-term support all coming together. That's called channel collision. And when we get channel collision, we get darknet signals. Now, darknet signals are contrarian-based signals, very similar to a contrarian system like Elliott Wave. But what we did and what I talked about was a trade with Coca-Cola, and I ended up buying some 44 call options with Coke with the September expiration. This is another example of Coca-Cola. And if you notice here, in the past, we've had buy signals and we've had sell signals. There's a winner back there in January. Here's another winner in March from about 42.5 to about 45. And then here was the buy signal that came 2 weeks ago. And of course, Coca-Cola jumped very quickly afterwards. This trade, by the way, closed at 91 cents that day. And I actually ended up picking these up for 91 cents. And so per option. So 91 cents is what? Well, you take that 91 cents, multiply times 100 because that's what a contract is good for. And you're talking about $91 for a contract. Very, very cheap. It didn't stay too cheap for long. It doubled in value within a couple of days. And one of the rules that I like to give folks is that there's something that I do. It's totally up to you whether you decide to do it or not. I like to get out of half of my position when it doubles in value, because then I'm playing with somebody else's money. All right, and that's what happened with Coke. Just to let you know the end of that story, I ended up selling the remaining half of my trade on Coca-Cola today. And that half of the trade came off at about 180%, give or take a few points, 180% return, all right, for that last half. So first half went off at 100%, second half about 180%. And that I would love nothing more than for that to happen with every single option trade that I do. But unfortunately, that's not going to happen because nothing that I have works 100% of the time, right? So what do? I spot the opportunity, I create a low-risk trade, and then I plan, execute, and manage that trade. That's exactly what we did with Coca-Cola. We spotted the opportunity. We used something called darknet, right? We went and created that low-risk trade. That's the low-risk trade you see on the screen. And then from there, we planned, executed, and managed the trade. And let's just take a quick look and see with Coca-Cola. Now, remember, this is the SEP21 44 calls, right? So I'm going to show you what SEP21 44 calls look like. And so I'm on the tools right now. I'm actually going to go to the option chains. All right, and the option chain is going to pop up, and it's going to it's going to pop up immediately with something that I might be looking at or have traded in the past, and that's what you see there with USO. But I'm going to change that to KO, and we're going to go in and we're going to look at 5% up and down. And remember, we're looking at, oh, this was not the week of 9/11. Excuse me. Let me update this to today's date, 9/18. There's Coca-Cola. Now I'm looking at SEP 21. Just come down and take a peek at this with me real quick. The 44 calls are right here. So you can see that 91-cent option. This is where it closed today, $1.96. I actually ended up selling these for higher than the 196 area. In fact, let me see if I can bring them up. I have it on my phone somewhere here. Let's see if I can bring it up on my phone. And I know I sold it in the twos. I don't remember exactly where. All right. I want to say it was around 225. Don't hold me to that though. But the market was up pretty good, and then it dropped back in the last hour today. And I was out of these. I actually had limit orders in to get filled at a certain price, and lo and behold, I got filled. But you can see here, this is a great example of a very cheap, very boring stock that made some very not so boring profits. All right, that was Coca-Cola. Now, spread review. Difference between, why I like spreads is if I'm getting over the $500 mark for an option, or $5 for an option, then it might make sense to spread it and reduce that cost and reduce the risk. And we showed you last week using a couple of stocks. I talked about Amazon. A lot of people are always bullish on Amazon. And I say, you know what, if you're bullish on Amazon, then maybe you might want to consider doing something like I do, rather than simply buying stock. Now, I also mentioned last week with Amazon that this was not a trade that I actually liked at the time. I simply wanted to show it as an example. So what we did was we looked at Amazon. In fact, I'm going to take a look at Amazon right now, but I want to go back to 9/11, which was last week. So I'm doing that. We're going to take ourselves back to my software allows you to go back several years. I've got years of option data right here, so you can back test. But let's type in AMZN, and let's go ahead and hit update. And we looked at, and I think I used the September 21 options as an example. And we were looking at Amazon, and Amazon was trading. Here's the stock price, 1987.15, $1,987.15. All right, and we looked at the 1987 half, 1997 half spread. Now, what that means is that and these are the calls over here. So I would be looking at them, and I just showed you how you could take something that's trading for, almost $2,000. The calls are $34, but that's $3,400 for a call option. But if you simply want to try to grab a few points out of it, and you've done your homework, and you're convinced that your strategy or your system has Amazon going higher, this might be a better alternative, because you'll pay $34.05, but then you're going to bring in $28.98. So that's going to be a difference of a lot less than 34. So I'm going to come up to the top here, and I've put the trade in. I'm going to click on risk graph. This is going to show me some more information. Oh yeah, so it's $507 now instead of $3,400. We have cut a lot of cost and a lot of risk. Right. So how has this trade gone? And again, I only use this to show you an example of how to cut your risk on the trade. You can see here that the stock has gone down since last week. The option price has gone down, but imagine, just look at this with me for a moment. The stock went from, the stock's down 100. No, not quite 100, but this thing's down, stock's down 50 points, okay? So stock's down over 50 points. Stock trader would have lost 50. If you'd have taken this $34 call, that $34 call today is $3.10 by $3.75. You'd be down over 30 points. You'd be down 50 points on the stock, you'd be down 30 points on the call, or you'd be down less than $4, all right? on the spread. That's the biggest reason I like spreads. It's not so much when I'm right, it's when I'm wrong. Okay. We also looked at a put spread, and we gave an example of Facebook. That one actually is going in the right. I mean, Facebook has dropped too. That spread's actually up for the week. But I didn't talk about that as a trade I really liked either. What we did was we did a case study using Federal Express, and this is the clip that I took the snapshot from last week's recording, and we were looking at the October 250, 260 call spread. Now, Amazon had an earnings day coming up, and that actually was yesterday. So if you know anything about me, and well, first of all, we're looking at this as a trade case study, all right, not a recommendation. But if you know anything about me, I typically do not go through earnings buying options. I'm not a buyer that goes through earnings, because the one thing that does happen is the price may go up or down, but the volatility in the options almost always goes down after earnings. So it's best to get out of an option trade that you're coming into through earnings. Yesterday, this trade was actually up about 30%. Today, no, it's not up 30% anymore, because the earnings have come out and the stock has dropped, but also the volatility in the options have gotten squeezed quite a bit too. But again, biggest takeaway on spreads is that I like spreads because I believe spreads are designed for these higher dollar stocks, higher dollar indices, right, that are there to allow you to get to be able to play those big stocks. I call it playing with the big boys without big boy money. All right. And I still do that. I do that to this day, because I just can't see spending $34 for an Amazon call option. Right. I can't see spending more than 5 points on an option period. So I like to cut my cost and I like to cut my risk. And that's what I do when I'm looking at spreads. And we're going to look at some examples. We're going to look at some case studies today. A lot of them came up today. All right. And so we'll take a look at some case studies today using both calls, puts, call spreads, and put spreads, depending on what comes up. I've not pre-scripted today's webinar. I don't do that. All right. I'll set some things up, but only because I want to make sure I tell you these things that I don't forget about them. All right. So that was just a really quick review. Here's the example of what the FedEx trade looked like yesterday before the earnings announcement. Was actually up about 32% from the previous week. So at the end of it all, these are the 3 things that I'm doing. I'm spotting opportunity, and that and that's what you need to do if you want to become more consistent as a trader, not a hobbyist. A hobbyist is one that comes in after a day of work, or comes in after being away from the markets for a while, and says, "Oh wow, Facebook is at 150, 100 below 160. I think it's going to go up." All right. Well, first of all, thinking is not a system that I use, and then goes away. I'm constantly in the markets. I typically take a trade every day. And the reason I do that is that, because I've got opportunities that I'm spotting every day, but I also don't like to clump in too much into one day. I don't want, let's say I have 10 different opportunities and they're all bullish, and they all appear in the same day. I don't like to take all of those on the same day, because now I'm taking a lot of excess risk, and I'm taking a lot of time risk, because what could happen tomorrow? Right, so I like to average in on my trades, whether we're in a bullish or whether we're in a bearish environment, and then it's creating that low risk trade or that high probability trade, and I'll do that. All right, I'll let you guys know I was long Philip Morris in the last week. Been long Philip Morris. I've been long Coca-Cola. I've been long, and these are all buying options. Merck. All right. I mean, I was laughing to myself. I'm like, wow, tobacco, sugar, and drugs. And that was all in my portfolio last week. Right now I'm getting out of all that. But what was I doing? I was buying calls, and I had some spreads in there. I had an Apple spread. That was a buying on an Apple spread, and I'm long AbbVie too, and I'm buying AbbVie spreads. And I'm thinking to myself, I'm really theta. I'm weighted really high in the buying options category. I need to sell something. I need to sell some spreads or sell some premium. So I did that. I did that with Google, and so I sold some premium in Google. And what I like to do is I like to try to balance out my portfolio where I have some of it is buying options and some of it is selling options. So I'm trying to neutralize as much of the effect of maybe market direction, but also time to expiration. And the big thing is volatility. I want to try to trade volatility neutral as much as I can. So by doing that, I have a strategy or a system that I use every single day. So I want to show you how I start my day every day. And so before I do, let's just jump over and see if we got some Q&A stuff going on. Let's see. We have so FDX, Gagandeep saying is so FDX is a loss. No, actually it's not, because you follow the rules. FDX was an out. If I really wanted an FDX trade with 30 days to expiration, or 45 days to expiration, why would I take the September 21st options? Why would I do a 2-week trade on something that typically is in the market for more than 30 days? All right. So if and that really becomes, I think that becomes really more of your decision, when you're evaluating trades. Big thing is when you're evaluating trades, what is, what's your outlook? What's your time frame? If you're evaluating FedEx and you're looking at the time frame on FedEx, if your time frame is October, you use the October options. I was looking at a short-term time frame last week, but we were looking to catch the earnings move, that earnings binge where people get in. All right. And again, I'll mention this too. It wasn't a recommendation, because you know what recommendations come with. They come with entry days and they come with exit days. And here at Optionetics, we want to teach you how to do this yourself. Okay. With spreads, do you typically have to hold them longer than a straight call? Okay. So Greg, that all depends. And the big depends comes like this. If you're if you're doing it as an earnings trade, or you're doing it as a pure price trade. If you're looking at it as a pure price trade and you don't have anything like earnings or maybe some other big huge event that could move that particular stock, then yes, you want to sit into that longer. You want to try to price that out where your end date, when you think that pattern or when you think that technical move is over, you want the options to be ending around that same time. Because with spreads, they typically, if you're waiting for a spread to widen out all the way out, then guess what? You're waiting. You really are waiting until that final week of expiration. All right. So just keep that in mind. All right. And so, again, I see this here is what is the what is the prognosis for every trade? Well, every trade has to have some sort of an ending date. And so when I'm looking at like Darknet, or I'm looking at the money calendar, or I'm looking at something in those areas, I start with an end date. It's kind of like when you walk in the mall, and I give this analogy all the time. When you walk in the mall, if you're like me, you know exactly where you're going. I don't stroll around the mall. All right. I know exactly where I got to go. I got to go to the Apple store most of the time. So I look at the direction thing and I see where am I and where am I going. And I do that with the majority of my trades as well. All right. And so that's that's the most important thing is where am I going, and then how am I going to get there? And you know what? And when it comes to trading, I may not always get there. I'm not 100%. I don't claim to be, right? I do look at patterns that over the last 10 years have worked 10 out of the last 10 years, but that doesn't mean it's a guarantee it's going to happen again. The thing is, though, is that when I see something happening over and over and over again, I kind of want to jump in on that side. I definitely don't want to jump on the opposite side of a pattern. Now, James says, you state that you got to know the volatility. How do you identify the volatility of an option? That is an excellent question, and I am going to finish up there, and then I'm going to talk about how I start every day. This is a good one. So, James, let me show you something that I use all the time. All right, and this is where your broker. I mean, you can get stock charts from anywhere. But when you start looking for volatility of actual option strikes, there's not a whole lot of places you can find them. All right, so if you notice here, I have options and I have options charts. So I can do this a couple of different ways. We're looking at Amazon right now. All right, so if I were to look at Amazon and I were to go to the option chains of Amazon, now take a look here. We'll look at the September 21 chain. All right, so I've got SEP 21 chain on here, and I'm scrolling down. First of all, am I looking at the right day? Yes, the 18th. So Amazon, and it has a lot of strikes. 1941.05. If I actually come over here and click on the actual option strike, I'm going to get a chart of it. I'm going to get a chart of the stock. I'm going to get a chart of the bid and the offer of the actual option itself. By the way, this option, the option we're looking at right now, the 1940 calls, they were trading back in July for 20. They went as high as over 100, and they've come back down. Now they're trading back down below 20. But here's the next chart. This is implied volatility. The implied volatility usually on options gets low in between earnings and gets extremely high as we get right to the earnings date. Okay, so if we were to look at, I'll show you a great symbol to look at. Let's go look at the stock chart. This is another way we can do it. Here's Amazon again. Now this particular chart of Amazon, I have the candlestick chart of the price, but I also have the red line, which is the option. All right, this is unique to Tom's trading or to Tom's option tools. We have and I can change this. This is a 7 to 30 day option. Notice what happened after earnings. This option went from an implied volatility of 44 down within about a week. We're down below into the 20s. So it can drop that fast. Even if the stock goes nowhere, you could have an option. In this case, if the option goes from 44 IV down to 22 IV, that means the time premium in that option just dropped in half, and the stock didn't have to go anywhere. So how do you use this chart? This chart is best used where buying low and selling high make a lot of sense. So we know there's a floor right now with Amazon using IV, and that floor is somewhere just below 20. Once that implied volatility gets around 20, it doesn't stay there for very long. It starts creeping back up again. And we've seen that happen. And so there are certain stocks that perform better around earnings strategies than not. All right. And we have the ability to look at that too. So if you look at, for instance, stocks, go to stock analysis. We have something in our stock analysis called earnings effects. And so what I can do is I can look at a group of stocks. Let's take a look at all of the pennies and weeklies. And I'm going to go in here and I'm going to say, give me the stocks that had the best price change before, all right, for the last 4 earnings. Which ones had the best price change? And that means that it could have been the best price change up or the best price change down. All right. So I'm going to hit that search button. Now, what this is going to do is it's going to review every penny pilot stock that I have in my file, which is, I think, just a little less than 400. In this case, 281 stocks were found. And what it shows me is I've got a lot of information here, but the area I like to look at is right in here. And we do special webinars on earnings that focus into the details of this. But I'm just kind of showing you giving you an idea of what we see. Now, this is price. Look at Under Armour, for instance. Under Armour has an average move of 8% before the earnings. The problem is, last quarter it was -8. The quarter before that was +8. Quarter before that was +11, and the quarter before that it was -5. So it's kind of a coin flip. Even though it moves around a lot, this could be great for a straddle, right? But there's another way we can judge it too. We can look at IV, and let's take a look at what happens, which stocks have the best implied volatility changes before 4 earnings. So what we're looking at here is we're looking at stocks where option prices actually increase as you get closer and closer to earnings. All right, and here you go. All right, it looks like Dow Corning, or I'm sorry, Corning, GLW, has had an average implied volatility increase of nearly 50%. Cree is on here, Archer Daniels Midland, Garmin, Texas Instruments, etc. So what we can do is we could take this list and we could save this list, and then we could take a look at this list and see how many of these had a move up in price consecutive quarters, or how many of these had a move down in price consecutive quarters. And what we're doing is we're starting to create patterns around earnings. The one pattern I can tell you that happens in almost every stock around earnings is right after the earnings report comes out, and I'm going to show you right now. Right after the earnings report comes out, look at the best change after earnings. Okay, 4 earnings in a row. Once that earnings report comes out, guess what happens to implied volatility? In almost every single case, it drops, and it drops hard. Take a look here. 57%. Akamai Technologies, Garmin, 56%. Yelp, 55%. Palo Alto Networks, 54%. And notice they're all negatives. Negative, 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 negative. This is a true pattern right here. If you're an option seller, this list right here becomes very valuable to you, because after earnings, look what happened to all these stock options. They disintegrated in time value. All right. So this, again, I went off the mark a little bit, but I wanted to show you just a scratching the surface of what happens and what you need to know about volatility. And you know what? I've just spent probably the last 10 minutes talking about volatility. Is that all you need? No, you need more, much more than me just showing you a couple of minutes of what's going on. And Brandon, thank you very much. I see your post that says this is too cool. I can't wait to go through another trading year, with these tools. Thank you very much. I'll let you know this. We got some really cool new stuff that you may not know about, and we got some very cool stuff coming at the beginning of 2019. Actually, we're going to release it out to all of our tools folks here. It's going to be sometime in November, within the next couple months. I've got something to release to you guys, and you're going to absolutely love it. I can't say any more. I'm bound. I'm bound by the covenant to not say any more about it, but you'll hear about it real soon. So how do I start every day? I like to start every day looking at what I call the 4 corners. Jay, if you feel like you want to say something.
Tried to get in here before you got through with this. Gagandeep was asking if you had an opportunity to talk on how to read the IV range on an IV chart, or should we have him email in and we'll deal with him personally in that regard?
What I do, Gagandeep, what I do with the IV range on the chart is the chart that we have up there, I think is a great start. That's about a 6-month chart that you see, when you're looking at, say, and I think you're talking about when I go to the stock charts area, and I've got the IV up. All right, this is a good place to start. You got the range right here. If you're above the 50 percentile area, you're on the expensive side. If you're below it, you're on the cheap side. I could do a number of different things here. Let's say you're looking at 90-day options. Well, then you want to use the 60 to 90-day implied volatility and just update the chart, and it's going to bring up the 60 to 90-day IV, which is going to be slightly different. All right. Let's say you want to take a look. You want to say, screw all this, just give me all the cheap stocks and all the expensive ones. Well, we got that covered for you too. All you have to do there is go into rankers. You're going to go to options, rankers, and then you can go to pre-computed IV. This is all the IVs has been pre-computed for you. And what you'll notice is right now I'm looking at the expensive. What are the most expensive stock options right now based on their range, which is what you asked. We've got it here. This is the last 1 year. As you can see, Marsh McLellan's up there at the top. Red Hat's up here, Thor Industries. But let's say you want to look at the cheap ones. You come over here, it says cheap for 1 year. And now you'll see Target came Bristol Myers Squibb, Macy's, Best Buy, Kohl's. I see a pattern here. I see a lot of retail stocks that have cheap options right now. And guess where we're going to be going after earnings? We're going to be going into the holiday shopping season, and that's going to be where I'm going to be shopping for retail stocks with cheap options, and this is where I'm going to go first. So you can get an idea. You can see a lot of retail stocks in this area that are showing cheap options. So not only is the next earnings season going to be crucial to try to buy something that has a great value, but also when we go into the holiday season too. So that, and again, I could get into this for an entire hour and a half, 2 hours. But I'm just scratching the surface. This is all kinds of stuff that we have available right here on tomsoptiontools.com. So I've started talking about stocks, bonds, currencies, commodities. What I want to do is I want to get a 40,000 foot view of what's going on in the market. From there, then I'll start looking at Darknet. I'll start looking at Money Calendar, and I'm going to show you some more money patterns tonight. And then finally, it's about creating low risk trades. So why don't we go ahead and start with that? So one of the things that I do with my tools is that, for folks that want a little bit of, kind of over the shoulder look at what I'm doing, once a week, we post up on our newsletter. We post up our newsletter, and one of the things we put in our newsletter is what the four corners look like. All right. And so I'm going to share with you what we were looking at. And we put this out midweek. So it goes out on Wednesdays. Now, last Wednesday, we were looking at the S&P, and we look at the SPY, that's the ETF. And we were looking at the fact that there are two areas that are showing some very good support levels. And that was the 288 and 286 level. And we were looking at some very good support there. And going into this week, we still expected the markets to really want to try to push higher. Of course, we had a bit of a bad day yesterday, but we had a really nice day today. We'll see where the rest of the week turns out, but we're sticking above those support lines as we're moving into that direction. If we have something that pops up, like, for instance, we had a Darknet buy signal back on SPY. That was back in near the end of June. That was at a level of about 269. And then, of course, a good 2.5 weeks later, we had a sell at 280. Nice move. When you can get 10 points, 10 or 11 points out of the SPY, that's a good day. All right. This is the bond market. We also like to look at TLT because, again, stocks, bonds, currencies, commodities, these all interrelate with each other. And so the bond market does typically move opposite of stocks. Now, bonds have shown a relatively great signal when we get down and we see Darknet. Now 50% of the time, what we've noticed is when you get a buy signal in bonds, you'll get a rebuy signal soon after. And that happened back in the beginning of the year. And that sell signal finally came in and was finally profitable. Then we had a buy signal. We did not get a rebuy, but we jumped up and got the sell signal about 30 days later. Okay. Down here at the end of summer, well, no, it's not the end of summer, July, we had a buy signal and we had a rebuy signal that came in. And about a week and a half later, the sell signal came in for bonds. Well, last week we had the buy signal that came in on TLT once again. All right. Last week I went long with TLT calls. All right. What did I do? Now I'm giving you full disclosure. I did this in my account. All right. This is a 30-day trading strategy, right? Somehow I didn't get the message because I put the September 21st on, but I kind of did because what I'm doing is I'm rolling out to the October 19th. I didn't want to buy the Oct 19s right away. I felt like I could get some better bid-ask spreads if I could hang out and wait. All right, so I bought Sep 21s, and now I've rolled the Sep 21s to the October 19s. And so that's where we have that dark net buy on bonds, and so it may be that, and when I get a buy on bonds, what's that telling me about stocks? It's telling me that the stock market could move lower. It doesn't always, but this is the pattern that we see happening here over the next few weeks that could very well happen. All right, stocks, bonds, currencies. We're looking at FXE. FXE is probably, the US dollar is really the world currency, but if I were to look at any foreign currency that I want to look against the US dollar at, it would be the euro dollar. FXE is the currency shares Euro Trust. It moves very highly correlated with the markets or the euro markets. As you can see here, we have created an area where we see some support. All right. We also see some lowering resistance. Now, I'm going to ask all of you a question right now. Let's judge your technical analysis. What does this pattern over the last 2 months look like to you? What kind of a pattern do you see? I'm very curious to see what you think. Derek says a wedge. All right, that's a good answer. Rick says an ascending triangle. Peter says an ascending triangle. Another Rick says a squeeze. I've got a pennant. I've got declining, inner range, double bottom. I'm not seeing what I'm looking for yet. Keep trying. Triangle sideways. Paul, inverted head and shoulders. You are seeing exactly what I'm seeing. Gary said it too. All right. And so, but you know what? We're all seeing some form of consolidation. All of your answers look good. I was just looking for something very specific. But a head and shoulders, we're seeing the head appear down here at the bottom. And a lot of you didn't see that because what you were looking at was the green line that came across. But we have a head here, we have a right shoulder, and we have kind of a left shoulder way over here near the end of June, beginning or middle June to the end of June. But what we also have is this dotted line is the neckline. And if the neckline is correct, and we do break above that neckline, I really am looking for somewhere around 114, right? Which is not that big of a move, but it's about 3 points higher than it is today, right? So I'm going to keep an eye on that one. But I wanted to see if you saw what I saw on here. Now, FXE. FXE is, it does tend to be a risk-on asset. That means that I like to see it move higher when the stock market moves higher. However, it's kind of come out of its link to risk on assets as it fell from 120 all the way down below 110 earlier this year. Maybe it might be getting back into becoming a risk on asset after all. Time will tell. Finally, when I look at stocks, bonds, currencies, commodities, I'm looking at USO, which is the United States Oil ETF. This one I pay very good attention to. When oil moves higher, that's actually good for the stock market. And I've said this before, what's good for oil is good for oil stocks. What's good for oil stocks is good for the US stock market. So as oil goes higher, it causes this cascading effect, this bullish cascading effect. However, I don't see oil moving too much higher here as we move forward. And as you can see, this was last week. Now, last week we were discussing, I do this live every Monday. All right, I do a live trading session every Monday with our Pro Tools users. And last Monday we were talking about hurricanes. We were talking about weather patterns. We were talking about the fact that oil could very well be in the buy the rumor, sell the news category, and that's exactly what ended up happening. This hurricane, which was devastating, was not as bad as a lot of oil traders had predicted, and oil sold off even before the hurricane had made landfall. This is the season right now where oil tends to slump, not go higher, but the markets have that built in. Okay, I think the box you see here, we think is going to break more to the downside than the upside. And then, of course, there's the new kid on the block, Bitcoin, cryptocurrency. Cryptocurrency has been something for a while that's been, you look at the tops and the bottoms in crypto, it actually has been tracking very well with the stock market. I don't look at it for that. I look at it to see where money is flowing as we flow into this area. I mean, you've got a huge $110 billion market cap, and that's at these prices that you're seeing here, the 63.50.36, right? Which is where we are right now. Now, I believe we have seen, or very, very close to a bottom. And the reason I believe that is that with Bitcoin is that A, there's been way too much negativity going on, and B, we've got an October 1st deadline that's coming up that's going to decide the fate of the Bitcoin ETF. Now, while many of us would just go, it's not going to happen, there's a lot of big money that's pouring into the idea that it is going to happen. There are big companies right now making big bets on Bitcoin going higher and cryptocurrencies as a whole. And so, the ICE exchange is one of those players. Goldman Sachs is one of those players. There's a lot of finance companies out there that are getting in this and getting in hard because they believe they're going to be seeing that move to the upside after October 1st. So we'll see. But we add this to part of the analysis because it is something that's traded. It is something that has a pretty big market cap on it. And it has taken that money. I think it has taken some of that money away from gold and from precious metals, because those were yesterday's areas to put money in terms of adversity. And perhaps Bitcoin may have taken some of that away. All right. So that's the first thing we do is we assess the markets and we look and see with stocks, bonds, currencies, and commodities. And right now, when I take a look at all four of them, there is a bit of uncertainty because I see the bond market that's showing buy signals. I see the stock market that is feeling a little bit toppy. And then we've got a derailment of the euro dollar and oil. If oil goes down, that's not going to help support the market at all either. So then I go and I start looking at other things, and so I start to create looking at these patterns will give me the idea to start creating trades. Now I'll look at the money calendar first, all right, but then I'm going to come back to it. So when I look at the money calendar, I'm going to show you that right now. So I got the money calendar up. And this is the money calendar for September. Now, as you can see here, where are we? We are September 18th. All the green has come and gone. In fact, by the way, take a look at August of just last month. All right, we came in the last month, and on Mondays, I'm barking out orders, and my orders were, they got some bulls and we got some bears. And on the 6th, we got some bulls and we got some bears. And on the 13th, we got some bulls and we got some bears. But look what happened on the 20th. We got bulls, we got bulls, we got bulls, bulls, bulls. A lot of bulls going through the 20th, through the 24th, through the 31st. And then we rolled into September. And here's September. And we're going in through the 7th, and we're going into the 14th. And look, folks, we had over a month of nearly nothing but green. All right. What has the stock market done since mid-July? Well, let's go back and take a quick look. All right. So I'm going to go back to stocks, charts, stock charts. And this time we're going to look at not Amazon, although Amazon was a great one. But let's just look at the overall market, SPY. If you look at SPY, and let's take this back, because this is kind of important. If we take this back and we look, you can see here, here's that July and here's that August, all right? And then notice with the S&P, we had a little bit of a pullback. But then let's look at QQQ, all right? Coming into the first week of September, things look really good. I mean, we saw a huge move in the Qs, DIA. This is another one. This one is obviously a different mix, but look what it did. I mean, it had that end of August into September, that move higher, and then it nearly held, didn't pull back as much. Okay, but there are a few times a year where I'll look and I'll see all this green, and this, this is, each one of these days gives me patterns that are 90% or better bullish or bearish. But when I see a lot of green on the screen, it tends to make me want to lean into the bullish side of the market, which is what I did. And my returns in my account this year have been better by far, just in this last clumping of green, than they've been all year. All right, so now here we are. We're sitting in the 18th, and it's like, wow, Tom, what do you do? All right, well, I don't stop trading, but I pull back because there's a lot of uncertainty. But I'll also find that, for instance, on the 18th, I'll find bearishness mixed with bullishness. There's a lot more bearish trades going on right now than there are bulls. All right, so I got to start looking at potential bears. That's important to do. But I wanted to start off showing you what the month looked like, showing you what September looked like. All right, how about October? You guys want to see October? I mean, we all have been told October is the scariest month of all right? But, we're talking about going all the way back into the 80s. Take a look at October. This might change your tune a little bit, because over the last 10 years, more stocks have been rising in October than falling. And I tell you, I wouldn't believe it unless I saw it. So there's going to be a lot of traders that are going to be sitting on the sidelines waiting until the middle of October, because they hear about this hedge fund selling, tax loss selling that happens until October 15th. But that hasn't been happening for over the last 10 years a whole lot. So I'm showing you something that most people don't know about. They won't know until I start talking about it in October. But I wanted to share it with you a couple weeks early today. So as I'm going in and I'm looking at bullish positions and I'm putting myself into October, I know something no one else knows. I know that the first 3 weeks of October, there are more bullish patterns than there are bearish on the screen right now. So that's something that we'll look at, and we'll go in and we'll evaluate. Okay. So back to looking at patterns. So right now, the patterns going forward over the next couple weeks are a little bit uncertain. But uncertainty doesn't mean we have to stop trading. You can if you want to. Okay. But what it makes me do is it makes me just look at the trades a little more carefully. So let's just do that. So let's start with Darknet. So I'm going to come over here to Darknet. I've got my Darknet trades up. I've already hit the button so I can get it ahead of myself and scan. So I've done a search, and I've done a search on the penny and weekly stocks. This is what's come up. Now, if I want to, I can go ahead and say, give me the call option trades on these stocks below. Give me some ideas. So I'm going to do that right now. And here we go. Now, watch with me a moment. We've got Annaly Capital, we've got Capital One Financial, Bank of America, Bank of New York. Here's Wells Fargo. So 5 of these 8 stocks are in the banking industry. The banking industry has been hit pretty hard. It just has not. The dollar's moved higher, and there's a lot of financial analysts scratching their heads trying to figure out why bank stocks haven't moved higher. But let's take a look at each of these 8. Because what I want to do is I want to look at them and find that diamond in the rough. Okay. XBI might be it. XBI is showing signs of these higher highs and higher lows. It's got some really good support down here. And guess what? Today it got another buy signal. All right. I am putting XBI on my list. Okay. I've traded XBI in the past. XBI has done very, very well for me. So here I am writing it down, XBI. That's for further research. BK, Bank of New York Mellon. Okay, it too does have support, but it's been trending lower as the dollar has been trending higher. Shocking, isn't it? All right, what else do we have here? Wells Fargo, is that a better looking bank? Well, it was until last week when it fell down, but it's now got itself into a buy. All right. Now, what I can do is I can go back and look and say, all right, the last time we had signals, buy, rebuy, sell, that's profitable. Buy, sell, that was profitable. So this might be one worth looking at. Wells Fargo. What else do we have here? There's Nally Capital. You know, this one's more one of those companies that that just moves in a small range. It's a $10 stock anyway. It's a $10 stock that became a lower $10 stock. I'd pass. All right, as I'm moving along, COF, Capital One. Okay, this one too has a nice, you know, higher high, higher low pattern off the low that occurred back in May. Potentially, it's a good one to look at. Facebook. Wow. Okay, so here's Facebook. Here's the fall off a cliff part of Facebook. Here's a buy and a sell. It did have a buy and a sell, and it did have a buy and a sell back here that were winners as well. But it just came out with a buy signal today. Now, this one, while it's, you know, Facebook is probably the most liquid traded options out there besides Apple when it comes to stocks, I think I'd be more apt to, you know, sell put spreads on something like this rather than buy a call option down here. Okay, so that's a potential, but it isn't the best looking chart. GPS, definitely not the best looking chart. Gap Stores has moved to new lows. Bank of America. So Bank of America has seen lows back in July when it hit 28. It came all the way up into the low 30s. It's back right now trading just above $30 a share. Did get the buy signal. This could be potentially something that could turn out and pan out to be something great. But if you look at all these charts, the one that I like the best is the one over here that's in the green, which is XBI. And the only reason that's in the green is really what happened today. Not the entire total chart, just what happened today. By the way, Baidu, which was on a recent darknet signal, let's take a look at it. Last week, Baidu was a buy. This week, Baidu is a sell. Baidu seems to be a buy and a sell for a shorter duration than the average 30-day, but it is batting 100% when you look at all the signals that have occurred in this chart. So darknet is something a lot of our members use. They love it. I think the only thing they say to me is, how do I cut my trades down to size? And that's what we do. Every week we go in and we talk about how to cut your trades down to what I feel is a better, higher probability list. Look for the ones that are closer to the highs in the chart. And to me, that's going to be XBI. Okay, so that's one way we can look at that. And XBI, by the way, if we were to take this a step further, all right, we would bring that into, let's take a look at the option trades. So XBI has the October 12th 93.50 calls at $3.30. The slippage is great. It's at 0.02. Let's take a look at it real quick. So this is 320 by 340. That's acceptable for the option. Excuse me. And I'm looking at this 93 half call for October 12th. And you know what's on my mind is, why not use October 19th? Is that a potential trade we could do? So I'm going to go to option chains. Now, if I pull it right out of the chart, it's automatically going to pre-populate XBI in the window for me. But what I got to do is I got to take myself out to October 19th. The reason I'm taking October 19th is I know there's more strikes. And I also know, or I should know, that the slippage, the distance between the bid and the offer is going to be, it should be at least the same as the prior trade, maybe even a little bit better. Take a look at this. So here's XBI, the 95 calls, 260 by 268, only 8 pennies. Okay, 94 call, 320 by 330, 10 cents. 93, 15 cents. 92, 15 cents between the bid and the ask. All of these have better bid-ask spreads than the options that expire a week earlier on October 12th. Okay, so, you know, if you ask me which options are the best ones to trade, on average, they're the ones that expire the third Friday of every month, because that's where the crowd is. And wherever the crowd is, that's where the efficiency is going to be. Okay, so that's where I'll deviate a little bit from what I see in terms of a trade like this. This is an example of the October 12th. I like the OCT19s. I like that because that's just experience talking. So spot the opportunity, darknet, create the low risk trade. In this case, calls, plan, execute, and manage the trade. Planning the trade and executing it, planning a trade, if you do it, doesn't take as long as it used to. You put it into your brokerage account, you set it up and decide whether you want to do a limit order, whether you want to jump in and buy it at the market, and then you start setting up your exits. And for me, for instance, if I'm looking at XBI and I say to myself, you know what, I like that $93 trade for 385 by 4. I'll tell you what, I'll take it for $3.95, and I'll buy, if I bought 4 of them, for instance, then I'm going to sell 2 when the trade doubles in value, and I'll hold the rest until the end of the pattern. And the end of the pattern for this particular trade is really around that October 12th time frame. So that's darknet. Darknet signals, they flex back and forth. Sometimes you won't find any because there isn't any patterns where we're seeing channel collision. Sometimes you'll find a bunch, and that's where you're going to need to start doing a little bit of work and filtering down to the trades that you're most interested in. Money calendar. Now I showed you the month, but let's go in and let's take a look at the day. So we're in September. Let's get ourselves back to September. Today's September 18th. Let's look at September 19th. That's tomorrow, actually. American Airlines. I like that to the bullish side. There's FedEx. Now this is tomorrow. Okay, so there's a pattern in Federal Express that is tomorrow that runs out 26 days. It runs you out into October. So this would be one where now that we're out of earnings, we're going to have a completely different trade here that's just pattern based on price. Okay, so I could take a look at FedEx and say, all right, what's it look like? Well, 2008 didn't look so good. Most stocks didn't look so good during this time in 2008. But every year after, we had potential moves. Last year was a 9-point move. Year before that, a 10-point move. Year before that, 11, right? Back in 2013, 16-point move. Now that earnings are out of the way, you got the volatility. The volatility risk is now gone. This is now price and time risk. So wanted to share that with you. Okay. But notice with money calendar, we take a month view, we look at a day view. And then from there, we start to come into what we call trade view. So earlier this year, beginning of the year, we actually added on something new. We call it Money Calendar Trader. So I'm going to start to show you a couple other money patterns that I use when I'm going in and spotting opportunities and creating low risk trades. So Money Calendar Trader is one that kind of puts everything together for you. So once you click on it, you just, if you're looking for that specific day, you just click on search. And when you hit the search button, it's going to show you what it looks at as being available for the day. So FedEx Skyworks Solutions. So and it shows you the latest open, the target percentage based on the money calendar, shows the trade example, the slippage on that trade example. It shows you the days to expiration, the days to the money calendar end date. That's the last date in the pattern. You can get IV on FedEx. You can get a picture of the stock on FedEx. You can get its trade entry date. You can get its money calendar end date return on investment based on the moves we've seen over the last 10 years, and its percent to double, what it needs to do to double in value. It lastly gives you something called power meter, and it will only display power meters that are positive. So what just happened? Well, we just took all the trades that were on the money calendar for that day, and the program scanned through, got rid of most of them, and said these are the ones you want to concentrate on most because they do happen to fall into a lot of the right categories. Okay, so that's Money Calendar Trader. And from there, what's it done for you? Well, it's already spotted the opportunity, and it may have helped you create that low risk trade, but you still have to plan it. You still have to execute the trade. You still have to manage the trade. Okay, because when it comes to stock options, and options in general, there is no robo algorithm that's going to automatically trade options in and out for you, right? Or at least there's not one that I've found yet. Okay, so that's Money Calendar. I'll show you a couple other money patterns too. All right, so Jay, I need your help with something. So if you could unmic yourself or unmute yourself, what is the next holiday, U.S. holiday, that we want to be looking at?
U.S. holiday.
It's not Halloween. That's not a holiday. That's my favorite holiday, but it's not a U.S. holiday where the markets are closed.
I'm drawing a blank. I could go look that up real quick, though.
No, I'll tell you. I thought you might know. Thanksgiving.
Thanksgiving. Yeah.
Yes. Thanksgiving is the next U.S. holiday. So, it is a good ways away. But as we get into October, I'm going to be looking into November. And the way that we can do that is we have a really nice pattern feature here. So if I go to Tom's Tools, and I'm going to go into Money Holidays. This is under our Complete Trader. So Money Holidays. And what's going to happen is we're going to get our Money Holidays pattern come up. Now, I can enter anything in here. Maybe it's Apple, AAPL. And maybe I want to look at the last 10 years of Apple, and I want to see, what does Apple do? Let's say the 30 days before Thanksgiving. So I'm going to bring this all the way out to 30 days before. I'm going to click on before. I'm going to click on submit. Now what's going to happen is this is going to take it out there. It's done already. But take a look at this. So what we've seen is, don't worry about 30 days prior, but look at 4 days prior. 4 days prior to Thanksgiving, Apple starts to make a move. It averages over the last 10 years 3.36%. Average profit $1.39. Now remember, that's based on where Apple has been, but I like that percentage number better. Has an accuracy of 80% with that return. Now, can we see if that's the highest accuracy? Let's take a look and see. Yes, it is. All right, so when it's at 80%, then I want to see what gives me my highest average profit. All right, well, that would be the actual dollar profit. But what gives me a highest average percent? The trade we were looking at. Let's say I want to look at more information on that trade. If I click on that trade and I come down, it'll show me exactly what happened over those last 10 years. Apple in 2008, during that period before Thanksgiving, probably was one of the only stocks to go higher during the 2008 debacle. But look what happened in year 2009. Shows you the percentage. 2010. Here's 2011, it lost money. 2012, 13, 14 made money. 2015 lost a little. 16 up 1 1.3. 17 up 2.28%. So 2.28% of Apple right now at the price it's trading at really puts it about $5 higher than it is now. So I want all of you to remember this. Remember the week coming into Thanksgiving, because it has been 8 out of the last 10 years, a very, very good week for Apple. We have the ability to do this with any stock that is a penny, pilot, weekly, basically the most popular stocks, and ETFs. We can look at a variety of holidays. MLK, Washington, Good Friday, Memorial Day, Independence, Labor Day, Thanksgiving, Christmas, New Year's. All right. These are the holidays that are here. We're working on version 2 of this, which is going to be even better. And I will leave it at that. But sometime, hopefully before the end of the year, that'll be out of alpha and beta test, and we'll be able to announce it to the group. But it's going to be something. It's going to be a little bit. It's going to be an additional add-on. Now, if you want to look at a single stock period and see what it looks to be doing right now, not a couple of months from now, we have something called the Money Calendar app. The Money Calendar app. Let's see who's fast fingers tonight. Give me a stock, someone that you want to see some research on with the Money Calendar app. You can just type that stock in. That would be great. All right. BA. Gagendeep he's quick. Okay, you know what? I'll take the first 3 because I'm a nice guy. BA. So I'm going to scroll down. I'm going to find BA, and I'm going to now what I'm going to do is I'm going to look at the next 10 days. We're going to look back 10 years, and we're going to look at the top 10 results. So 10, 10, 10. All right. Click on show. There we go. Okay, so what we're looking at right now is we're looking at Boeing. And right now, Boeing in this particular area, 90% chance in the last 10 years. So 90% of the time going forward in the last 10 years. And if I click on this, I'll get some more data. All right, where's my data? There's my data. So there's Boeing. Shows me the trade dates starting the next 10 days. So the start date is going to be October 2nd. All right, and it's going to run all the way to November 7th. That's your 27 days. If we want to look at trade data, you can see here, the only time it didn't work was 2008, but every other year, that stock went up in value. Good call. All right, let's see what else we got here. U.S. Steel, X. So I can just type in X, and that takes me to X. Now I went by X, there's X. We'll just click on show. Okay, quite the opposite. U.S. Steel has a 70 to 80% chance of falling over the next 15 to 30 days. Okay, and then finally, someone had asked, the third type in came for Microsoft, MSFT. I know it's in here. There it is. Microsoft, show me what's going on. Microsoft, 80% chance of moving higher in the next week. See here where it says 0, that means today. 5 days is 5 trading days from now, 10, 15, 25, 30. But we see here, there's your Microsoft, starts October or September 26th, runs through to November 6th. And what kind of data are we looking at here? Well, lost money in 2008 and 2012, but look at this, 13, 14, 15, 16, last year, $10.62. If I click on that, it shows me the exact trade. Wow, if that isn't like watching grass grow, except for this particular area, I don't know what is. That's the money calendar application that we have that resides right on Tom's Option Tools. We have money holidays. We have one that looks at weeklies, and it'll look at the best trades happening for that particular week. We have a crypto calendar, which will look at Bitcoin, and we can look at Bitcoin very much the same way. If I pop over and look at the Bitcoin calendar, click on show right away. Right now, Bitcoin is showing that soon, between now and looks like over the next week, we're seeing chances of patterns to show Bitcoin moving much higher over the month, the rest of September and into October. We have a clock, a money clock and a crypto clock that actually dial this down to the actual day. What is the best time of the day to buy or sell these stocks and crypto coins? Okay, so this is all stuff that we look at in something we call money patterns. I've shown you a few money patterns. I've given you a couple of ideas on money patterns and on where the market may be looking to go. So if I summarize this all kind of comes into, again, stocks, bonds, currencies, commodities. What are they telling us? What is Darknet telling us? What is Money Calendar telling us? Can I find any trades that are both Darknet buys and Money Calendar buys? I look for those as well. All right. And then it's just a matter of putting these things together. During earnings, I've got earnings patterns. I've got other patterns that happen outside of earnings. If you were to take a look, for instance, at our searchers, we've got single strategy searchers on collars, condors, straddles, butterflies, etc. And a lot of these have pre-designs built into them. We have multi-strategies, which will allow you to even create your own strategy. If you create a strategy in here and it's that good of a strategy, I'll name it. You can name it. All right. And we'll put it on here. We have your saved searchers. I've got obviously my own searchers. We've got Darknet searchers. We've got some new stuff with moving averages as well. Again, that's one line right there with our searchers and a whole bunch of stuff in here. And we've got, across the board here, tons and tons of things that just are not available on any other platform that I'm aware of. So, you want to know what I use? That's what I use. Okay. Yes, I'm giving an endorsement to myself. I'm sorry, but this is what I use. All right. Now I want to share with you how, because we have a couple different levels of our option trading. And if you've gone in the last couple of weeks and you've tried out the free trial, for those of you that are new, I hope you've been able to use it. We've had some videos that we sent out for you with you during each day during the free trial, showing you a couple of things that you could do in different areas I would go. But we do have 4 different levels of service with our packages. We have an option trader package. We've got the contrarian trader package, which comes with Darknet. We have the complete trader, which comes with the money calendar. And then we got something called professional trader. If you've ever seen those, this is what they look like. So the price that we have right now, these are the prices we have right now for these packages. These are monthly, $79 a month, gets you what we used to have with Optionetics Platinum. That's it. It's Optionetics Platinum, but it's so much more because we have the weekly videos that we put out. We never did that with Platinum. We have live support. I'm not talking about some sort of email or text support. We do have that, but we have live support via phone and Skype. But we do have email as well. We have unlimited access to 100+ different training videos that teach you exactly how to use this. If you like Darknet and you want to step up, Darknet or the Contrarian Trader is the option trader plus Darknet added on top. And that is, we have that specially priced at $149 a month. If you like the money calendar and Darknet, we bundle it all together. Option trader, contrarian trader, and the money calendar, and we call that our complete trader. That's $199 a month. Now, I want to talk about this one to the right because it's almost never available. It's kind of like Pappy Van Winkle. It's the Pappy Van Winkle of option software. It's hard to find. And so this one, we don't have, we had a membership price at $5.99 a month. And there's a reason why that one's more expensive. The reason that one's more expensive is that it comes with everything, the option trader, contrarian trader, complete trader. But what it also comes with is our real-time software with our partners at TradeStream. And it also has real-time proprietary tools that are mine that are bundled with that. And it also comes with our webinars that we put together that are live every day, Monday through Thursday during the market hours. So it's something that we've added on as a bonus. But $5.99 a month is something I'm not going to share with you tonight. What I'm going to share with you tonight is for those of you that are interested in the professional member trader, we're going to do something for 24 traders, all right? There's only 24 spots available. We limit the spots on this because this includes, I want to make sure that you're able to get into the live rooms and not be locked out. So we do not have any more memberships than we have space in our live trading community. So this all comes with support, forums, videos, like I said. It comes with my weekly outlook. I do a weekly outlook. Even if you get the contrarian trader package or you get the complete trader package, it does come with the weekly outlook. But the pro package comes with much more. So what we're going to do is, for those of you that want to sign up for the pro package, we're going to do an annual package special. All right. I did this earlier this year, so I've only done it one time this year. That annual package is 12 months of professional trader. All right, the professional trader level, which includes the real time. It also, we're gonna bonus in my TTR home study course. All right, this is the next level up from the Optionetics home study course that was done long ago. All right, this also comes with audio CDs, which were done earlier this year. All right. The next bonus is we're going to include 200 live webinars. These are live market seminars that we do Monday through Thursday from 2 p.m. to 4 p.m. We do them during the closing rotation of the markets every day, Monday through Thursday, Eastern time, live with the markets. This is myself, Dave Shamans, who is the founder of TradeStream, and Steve Novak. Some of you may remember Steve. He was with us at Optionetics. Well, guess what Steve's been doing for the last 10+ years? He has strictly been a professional day trader. He trades the markets every single day. To get him to come on and do this was like pulling teeth at first. But then he realized he's talking to himself all day long about what it is he's looking at. Talking into a microphone is no different. And the members we have right now absolutely love Steve because he's just that good. All right. All of this is recorded for our professional members. It's 400 hours of live webinars annually that you get. All right. Now we have a bonus on that we've got, which is the Bitcoin calendar and clock are going to be included on this as well. So we've got that too. That's something that was not made available until recently for our professional traders. And we're actually putting this on. We're actually going to be putting this on the TradeStream software really soon, so that you can access it right there on that platform. Now, this is something brand new too. That's going to be that's already added. This in 2018, and we started testing it at the end of last year. Is robotic algorithmic modules for TradeStream, where you can go in and you can program your own buy and sell signals right there within TradeStream. And by the way, with the right attached to the right brokerage firm, and TradeStream actually links in with several brokerage firms, will allow you to actually trade those signals, right? So at least one day of each week is designed toward understanding how to put in and how to program. And a lot of this has already been done for you. You just plug in some of the variables, and you're able to have your own RoboTrader system right there built into TradeStream. TradeStream, by the way, the reason I like it is I like to call it the fastest software on the net. All right, what makes it so valuable is that their software sits 100 yards from the Chicago Board Options Exchange servers, from the New York Stock Exchange servers, from the NASDAQ servers, because the guys at TradeStream actually bought a cage at NY4. And NY4 is actually a block of computers that sits in New Jersey. You know, if you think the stock exchange runs in New York, it doesn't. The New York Stock Exchange runs all its trades through its servers in New Jersey on the other side of the river, and TradeStream is in that same cage. It's in that same bank of cages. So, you know, when you look at real-time quotes coming through TradeStream, you really do see what real-time is. Compare that to your broker, compare that to wherever you're getting your data from. I think you're going to be really shocked at the difference. You might even be upset when you find out that maybe you're not getting the real-time quotes that you think you were getting with the larger firms and reporting services. So, you know, and there's several of these folks out here that, you know, that love our tools, and I just threw a few of them on there to show them to you. But you know, at the end of the day, we have something that nobody else has, and I want to put together a package for you that really gives you the ability to get in on this thing at a fantastic price. So the professional trader package we have is Option Trader, Darknet, Money Counter, the real-time module, which is the TradeStream module we have, and it includes the algorithmic trading modules that they have to date. That's the first thing I want to mention. The second thing is it does include my market letter, which comes out every Wednesday evening, member forums, videos, live support. Those are all included too. You get 200 live market webinars. That's 400 hours of trading. I think that's priceless, because you're getting me and my team 4 out of every 5 days of the week live as we hit the dirt and show you what we're looking at each and every day. We're bonusing in the home study course with the audios, and of course we have that money calendar and clock, which are going to be coming along with this. Remember the monthly price on the professional trader package, $5.99 a month. For a year, that comes out to be $71.88. What we're going to do for 24 folks is we're going to offer it to you for the complete trader package. So paying $199 a month times 12, you make that payment, that 1 year payment of $23.88, and we're basically going to upgrade you into professional trader. So the place you want to go to is www.tomgentile.com/professional trader. I'm going to take you there right now, and it's very easy to get through the through where you got to go. Okay, tomgentile.com/professional trader. There you go. This is what you're going to see. You're going to see everything I just talked about. You're going to see, obviously, that there are 24 memberships available. That's what we have available right now. That's all we have available. So click on that button. That'll take you to a terms of service page. In fact, before I even get there, let me just back up a second. I want to cut or copy this, and I want to make sure all of you have access to this that are interested. So if you go into your chat window, yep, and Jay, you putting it there also. I'll also put it one more place for you too. I'm going to reply to a question and send that reply to everybody. So now you should have the ability to go in and click on that. So you click on that link, you'll come to this. It'll share everything with you that you get in this package, and that is all of that option trader, contrarian trader, complete trader, TradeStream real-time package, and so much more. And what you're going to end up doing is you're going to get that at that price of $23.88. You go through the terms of service. After you've read over that, click if you agree, click I agree. That's going to take you to our PayPal page. From there, if you have PayPal, all you have to do is just go ahead and click on log into PayPal. If you're not a PayPal user, you can either subscribe using a credit or debit card, and that's another way you can get in, just using any Visa, MasterCard, American Express. You do not need to be a PayPal user to take advantage of this. Now, you can see here, we've put the special price in, $23.88 for a year for our upgrade annual subscription. That upgrades you to the professional trader package. What we also do is it will lock that rate in. So next year, you're not going to get charged $7,100, all right? You will be charged the same $23.88 every year until you decide to cancel, and you can cancel at any time. So, Jay, is there any final things that you have for us before we close up for tonight?
Let me unmute myself and take a look at the Q&A box there, Tom, on what Deanna had to say. But if I can interject one thing on that home study course, a lot of people are asking for videos on the money calendar steps, the darknet steps, how to use that. We have a great many videos in our library, but what's a beautiful thing about that home study course is some people still like that written word. There's what's called a resource guide, and there is a step-by-step tutorial as to how to navigate and use that darknet as well as money calendar, that you can use that, walk through the tools with that as your guide, and then use our live support on any other follow-ups.
Absolutely. And you know what I mean? And thank you guys. So, Don and Deanna, and you guys, thank you very much, Dave. I appreciate the comments. We have a good group of people who are already getting these tools. And, it's amazing the amount of folks that we have coming in every day. Every day, I see the same people coming in to our real-time webinars that we do during market hours. And, the fact that they keep coming back again and again and again, to me, that says everything, because I don't want to waste my time doing anything. I mean, time is probably the most valuable commodity of everything, of all. I kind of find that out every day. And so the fact that I keep seeing the same group coming in time after time tells me that we definitely have something special here in terms of this particular product. If you guys are interested in this, pick it up soon, because there's only 24 spots. Actually, there's less than 24 spots now, but there's only a certain amount of spots that we give out. And if we have room 6 months from now, we'll offer it again. If not, we won't offer it again until we have room. It just so happens that we do have room. Excuse me, we had room for 24 folks. So I wanted to make this available to any of you that were interested in it. The monthly package is not available. We don't do the monthly package. It's full. That membership is full. The only way you can get into this, and the only way we really want you to get into it, is with an annual contract, because that way you're in for a year. And this is a year where you will come out of the year a lot more knowledgeable, with a lot more experience, and how to use tools that just frankly nobody even knows exists out there available. So and Atul is asking, he says he wants to sign up. Atul, I'm going to send you the link, and so just all you have to do is just click on that link, and we'll get you going. And again, for those of you that sign up this week, we will have you ready to go with you'll have the software ready to go immediately. All right, we'll get you the software up and running in 24 hours, but we'll get you on the webinars starting next week. All right, I might be able to get you on for possibly Thursday, maybe tomorrow, but again, want to get you there and get you going. Carol's saying he's very impressed with the development of the tools since the Platinum site of years ago, and so it is it is the best. I like to think it's the best. Thank you guys for putting those out there. Thanks a lot. Again, thanks for joining me over the next 3 weeks or these 3 weeks. I'll have a recording out for you. I'll have links for the tools. For any of you that want to get in, if we have a few spots left, obviously I think we will, but I think they're going to go very fast. And again, if you have any questions on this or anything that we've talked about in the last 3 weeks that we didn't get to tonight, then here is an email: support@tomgentile.com. If you go to support@tomgentile.com, we will be happy to answer any questions that you have, so long as they're not involving specific investment or trading advice. That's obviously something we can't do. We've never done that. I never will. All right, guys, thank you very much. Have a great evening. Recording will be coming to you soon. Talk to you in the future. Thanks, everyone. Good night.